We have achieved a lot. It was an exciting moment. We established truly a dream team of leaders on blockchain, Internet of Things, artificial intelligence, data policy, drones, autonomous vehicles, precision medicine, and the environment, and agile governance. We have today 37 partners, including the founding partners Sompo and Suntory, Microsoft, SAP, Palantir, Turkcell, Kaiser Permanente, and Reliance Holdings. I was really excited when we launched the center and got the attention and the adoption from around the world. Today, I am 10 times, 100 times more excited because with the active participation of the Japanese government and active collaboration with Asia Pacific Institute, we're announcing.
You don't have a recession when the economy is still creating jobs and there are no big bankruptcies. To me, that means you can actually buy the banks. Yes, I know Warren Buffett is selling Bank of America. That does not mean you should get rid of the banks. It may mean that they've been trashed for no reason other than selling. That's a good opportunity. You know what? I like the stock of Morgan Stanley for my trust. It's got a 4% yield. I think there'll be more acquisitions and IPOs in the next year. This one folded like a cheap suit in the last 3 days. Hideous action. It could kind of end here, the selling, with a high yield, lower yield environment. It's worth a try. You can buy stocks that yield more than 4%, take advantage of the sudden decline in interest rates, which makes high-yielding stocks the best game in town for income.
Absolutely. And, you know, this may surprise people. I'm calling for a 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting. And that's minimum. The Fed funds rate right now should be somewhere between, 3.5% and 4%. Let me give you very simple logic of my position here. At the June meeting, the Fed has said that the long run Fed funds rate, when inflation reached 2% and unemployment has come up to 4.2%, should be 2.8. That's the normal. 2.8 is the normal Fed funds rate. Well, on Friday, we blew across the employment number. We're at 4.3. That even argues for a lower one. Now, as far as inflation, we're at 2.5%. We've gone down 90% towards the target on the inflation rate. We've overshot the target on the employment. Those are the two targets explicitly mentioned by the Federal Reserve. All right. And how much have we moved the Fed funds rate? 0. That makes absolutely no sense whatsoever.
As long as the economy remains strong, there is no hurry for the Fed to lower those interest rates. I mean, I think that's the bottom line.
Does that mean you think we could go the whole year without anything? I mean, that's in a sort of Jamie Dimon-esque sort of posture. I mean, in fact, I think he had said there was even a possibility they could raise rates at one point.
I don't think they're going to raise rates because I think inflation going down that, will convince them to be on hold. Is it possible that they won't lower rates this year? Yes, that is possible. It's not my baseline projection, but, as I look at all the real data and all the real-time real data, I don't see any real slowdown yet.
Warren Buffett sold half of Apple stock, but the media is leaving out. Apple is half of his portfolio.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And guys, make sure you go to TikTok, follow, and like. And we have Jim Cramer back at it. As the house is burning, what does he say? Oh, don't panic. It's no worries. Anytime we take a beating like this, guys, is deaf in algorithm. Will you pick back up? Yes, you will. But this is a sign for something bigger. Now we have Jeremy Siegel playing the Hegelian dialectic. And guys, we heard from Jeremy Siegel plenty of times. I brought you plenty of videos. He's saying Fed is on the right track to lowering inflation. Now all of a sudden, We needed emergency 75 basis points, and then on top of it, another 75 basis points in September. You can't make this stuff up. Now, we know the fourth industrial revolution stocks are going to take a hit, but what's going to happen, guys? They're going to rise right back up. It's just whether you have the patience. If you know about the fourth industrial revolution, you understand the plan, you can sit back and be patient. Now, we had Japanese stocks take a beating, and they're taking a beating again. And with Japan raising rates, it hit the global economy. And how long have I been telling you what was about to happen? Remember, I'm just a watchman on the wall. It's my job to tell you. What you do with it is your business. And the same thing goes for my followers. Make sure you educate, but that's all you have to do is educate. You told them it's up to them on what they do with the knowledge. Now, we had the Fed pump trillions of dollars in the market. And don't forget, guys, we all know people forget, but BlackRock was that fourth hand of the Fed, buying up everything. And we know they have Aladdin. And Aladdin is doing what? Is going to be selling everything. We've seen this movie before. That's how BlackRock and Vanguard took over the globe. And then, guys, of course, back to Japan. Don't forget, Japan leaders were brought to San Francisco to map out the fourth industrial revolution. He says it right out of his mouth. We're here to plan the fourth industrial revolution, where the robots, algorithms, and drones take the economy over. Now, he doesn't talk about the metaverse, but you know I do. The virtual world where they want the sheep to go and sit back and get that free money. Guys, this is biblical. Remember, this money is going to be programmable, telling you what, when, and how to buy, and you have 3 to 6 months to spend it, or poof, it's gone. And we know a lot of people went to church yesterday. What are they reading, people? And we have the sheep distracted on things that don't matter. And we know my people perish from the lack of knowledge because they reject it. Not because it's not there. It's because they reject it.
It's time to educate the youth.
And you heard that from the king. Over the next 3 to 5 years, guys, you're going to think you're living a movie. And remember, the Cryptoteacher told you. Because he knows, when it comes to the NWO, it's all planned out. Have a wonderful day.
The yield curve on the 210 disinverted and now is positive for the first time since 2022. I wonder if you could factor that into your thinking. Is that a development that you think about in terms of having economic outcomes? And what is it reflecting, in your opinion?
Yeah, look, think about that a little. As you know, previous to this period, which is extremely unusual, the inverting of the yield curve is a very strong indicator of recession. But it's been inverted for 2 years, and we didn't have recession. And I've mostly written that into this was such a weird business cycle, and people have been anticipating that rates, the differential between the short rates and the long rates, and their expectations were kind of driving that in a way that was ahistorical. Now, just be careful of what's the cause of what. So if people get scared and the long rates come down and they think the short rates are going to fall, it's going to affect the yield curve in a way that's going to de-invert it. But for the same reason, an inverted yield curve didn't have to be an indicator of recession. The uninversion of the yield curve doesn't have to not be an indicator of recession. So that's one piece. I definitely watch it, but it's not definitive for me.
The global sell-off intensifying this morning, led largely by tech. Want to bring in Dan Ives, Managing Director at Wedbush Securities. We're looking at the NASDAQ now off about 856 points. Of course, Apple, Nvidia, some of the big laggards. Dan, what do you make of the sell-off? It's a falling knife at the moment. Do you want to catch the knife?
Yeah, I mean, look, for us, we're navigating investors to this white-knuckle moment in terms of looking at the tech names and the winners, what I believe is going to be this AI revolution. Look, there's no doubt that investors over the weekend and today call and trying to say, is this the end? Is this the end of the tech bull market? I don't believe it is. I believe this is just a massive fear panic that would create the opportunities for NVIDIA to own Apple, Microsoft, Amazon, Alphabet. And that's always been our playbook the last 24 years covering tech.
So when clients call you this morning, are you telling them to buy on this? We'll describe it as weakness, but boy, it feels like it's more than weakness.
Yeah, I mean, we've been basically, I would say almost table pounding in terms of put the levels, put the names that you want to own that I believe are really going to view this as more of an opportunity rather than as sort of catching a falling knife because of where the growth is. You look at earnings, you look at the numbers. I mean, I'm here actually in Tokyo, and across Asia. The demand is here for AI. That is not leaving despite what we're seeing with this Nikkei sell-off here in the global rout. That's what we're telling investors across the world today.
To one of the big stories in the market, that is Japan. Its market, as you heard Bob talk about, is one of the main causes for the sell-off. And after a red-hot start to the year, Japan's stock market posting its worst day since October 20th, 1987. That sell-off triggering at least part of the global rout that we've seen over the past 24 hours. Kyle Bass is founder and CIO of Heyman Capital Management, warning investors about Japan's economy, specifically regarding its currency and the yen. Kyle, welcome. I feel like we got to stop doing this on nights like this. I'm going to go to Japan in just a second, but I want to follow up on what Steve was just hitting on. The bond market, the bullies in the bond market, they've already been pushing around interest rates. Is the bond market trying to do the work of the Federal Reserve right now?
There's a more technical answer to this, Brian. And late last year, you saw the way the government funds itself go from bonds to bills. And I know that sounds like an arcane idea, but what that did is it released another $2 trillion-ish of liquidity into the market going into the elections. And one can think that these bodies are apolitical, but I can tell you that knowing what's gone on behind the scenes, I can tell you that there have been some political currents going on there. And therefore, now the cries for intermediate cuts are coming. Remember, back in 2000, Greenspan in mid-December announced that he was probably going to cut at their January meeting, and it forced him to cut 50 basis points intermeeting on January 3rd, 2001. So that even if the Fed's not intending to cut, here's what happens. They say they don't care about the stock market, but every time one of them talks on television, they go watch what the stock market does as a result of them talking. And so if the stock market rolls over and high-end consumption collapses, which is likely to happen, then you have the whole economy rolling over because it's high-end consumption holding the economy up. And that would make the Harris win less likely. So I think you can expect some aggressive Fed cutting between now and the November election.
Okay, you went there, and it's so I'm going to follow up with that as well, Kyle. How much? Because the internet mob is out there blaming this on election cycle potential changes, and I will get to Japan in a second.
Then we went from funding by bonds to bills, and the Treasury General Account and the overnight reverse repo at the Fed put in another $2 trillion of fuel to the fire, and now that fuel's kind of burning off, and now you're seeing things turn. We all looked at each other and said, "Hey, the Fed raised rates, to 5.5%. Why hasn't the economy slowed down?" And it's because the kind of the powers that be were pushing a lot of liquidity into the markets. Well, now that liquidity is no longer here. So, Brian, this is a natural result of an unnatural situation where the Fed has been extremely accommodative and the Treasury and Congress have spent like drunken sailors, and now kind of the time to pay the pipers here, and there's a liquidity gap. I think you're going to see aggressive cuts between now and year-end. Markets come up with you. But now you've had the Japanese yen go from 160 to 145 in a nanosecond, and you've had the Japanese stock market drop from 42,000 to 31,000 in a month. You've seen a 25% decline in the stock market in a month. You saw their market go from +6 to -6 in one day today. And that's because, again, like this massive trade is unwinding, but it's not necessarily hedge funds. It's the savers of Japan. It's what Japan does. They go buy dollars and they invest in dollar assets with their money, fearful of the fact that they're going to lose more of their purchasing power in yen. And then when that trade unwinds, they have to panic and close everything out. And that's what you're seeing going on, coupled with the fact that the U.S. economy is certainly...
AI software company reporting earnings of 9 cents per share. That was a penny better than estimates, up 80% year on year. Revenue of $678 million, also better than estimates for $652 million. Q3 revenue guidance, that was coming in at $697 million to $701 million. That's also higher than the street. Full year guidance raised $2.74 to $2.75 billion, with adjusted operating income from operations, U.S. commercial revenue, and adjusted free cash flow all also raised for the year. Now,
going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting more right now with Bloomberg's Sonali Basak. Sonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Joshua and Drama Team save New York from COVID Stories 3. Part 3. King Joshua and Drama Team goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.